Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this light volume Tuesday, November 12th, 2013. We do have a little bit more volume than yesterday. Yesterday was Veterans Day, so it was very, very quiet. So more volume than that, but still pretty light. Now, a couple interesting little tidbits about today's action. Number one, with the light volume, the markets are still hovering to the downside. So I think that is kind of an interesting little action on the markets right now. Usually with light volume, the markets would be floating up, and right now they are towards the lows of the day. Now, it doesn't mean we can't get a buy program later today, but I am following a couple key trend lines. Number one of the main trend lines in focus would be this green trend line right here. You can see the markets pierced the 200 MA, which is the red line on the intraday 10-minute SPY here, which again is the S&P 500 essentially. And they bounced off of it, bounced up, and are now trying to come back in. If that level gets taken out, you actually have a little bit more downside until this level, which is not that far lower. But if you get through this level, which is at the 176.35 level, then you actually could fall all the way into the blue line down here. Now, again, on such light volume, I have a hard time believing that's going to happen, but it is warranted in terms of watching it. Just keep an eye on it so you know the levels to watch here. So, again, right now, the current levels on the SPY are 176.55 and then 176.35. And if you get through the 35 level, look for a bigger drop down to about 175.65. Okay, and again, we're talking about the SPY here, which again is the ETF tracking the S&P 500. Now, looking at the indices across the board, S&P's down 7 points, Dow's down 51, Nasdaq's down about 10. So we do see some red across the board today, which again is coming off the back of a very quiet consolidation day yesterday, coming off the reversal on Friday to the upside. Now, again, one thing I've talked to you guys immensely about in these videos, and I went over this yesterday, so make sure you guys are tuning in each day because it is these type of updates that will keep you on the cutting edge of what to expect, what to look for in the markets. But basically what we're following now, after Thursday's big drop, you put in a new 52-week all-time high in the spiders and a recent low. And if I show you and zoom out here, you can see this is the most recent low since really all the way back on October 24th. So we're talking 2-3 weeks in terms of a pivot low here, especially in the recent activity up here. So basically what you want to do is use this high and this low from last Thursday as your pivotal levels now going forward. So anything between here is just choppiness. I still have a slight negative bias on this market because I think it's oversold, and I think the charts based on the daily, which I'll show you in a minute, continue to give me just a slight negative bias to it. But again, ultimately, we need to refer to the charts. And you can see the spiders as we speak back into this first green line at the 176.55 level. So keep an eye on this market right here as we speak. All right, now again, one little interesting tidbit here as well, which those of you that know the methodology and price pattern time factors can relate to. You had a big upward move on Friday, a pause day on Monday, which was yesterday on Veterans Day, and you're actually seeing a fall here as the markets are hitting their lows of the day. So this bullish consolidation off this reversal is, needless to say, not that significant. It's not doing much to this market, and the market continues to be weak here as we are falling down. We may get down to this green line, the second green line, in the midst of this video. So ultimately, again, guys, when all is said and done, do we confirm above this area here, or do we confirm below this area here? That will be the directional shift for the coming weeks, in my opinion. So again, if we break down and get below the lower level here, confirm, then you're looking for continued downside. Now, remember, a close below, especially since we saw that on Thursday, I kind of went along with that and said, it's a close below. It's close enough. Well, there's no such thing in the markets as close enough. And that proved it from Thursday's close below the Fed day low, as I've talked to you guys about. So you really want to see confirmation to get a firm view, and that will be, again, the trigger, in my opinion, for continued action in that direction. Now, granted, you'll have a buy-the-dip mentality here and there. That's normal. But I do think, again, that we're continuing to see weakness in this market. Yes, Friday was a great reversal, but yesterday on the latest lightest volume of the year. They couldn't get this market to close really higher. It was basically a flat day. And today on very, very light volume, markets now are actually down decently. If we do a quick check, a recheck on the S&P 500, we're now talking about being down over 8 points on the S&P. Dow's down 64 now. NASDAQ's down 14, so it's not a huge drop, but notice this, we are coming into the next level here on the spiders, and again, very, very nice. Now, I did put out a new hot chart and alert that triggered today, so we'll be keeping an eye on that very closely. I'm going to keep my eyes on other plays as well, as there's plenty of possible action moves here across the board. So again, we'll stay tuned on those. For those of you that have the research center or have taken the free trial, you can be monitoring that. Couple stocks I want to point out, and look at this, right into that level that I gave you guys at the beginning of this video. We are now kissing that level. What a beautiful level right here. Now, this is the big one because, again, in general, light volume, you'd anticipate that this level would get a small bounce, as you're seeing here, and maybe even hold it. If it doesn't hold, you actually have a lot of downside potential into the afternoon period here, into the close. All right. In fact, if we were to somehow sell all the way down here today, I think that would be very bearish, considering it would be more than a 50% negation of the move up from Friday, especially on a failure of a little bit of a bullish pattern. And you guys understand what I'm saying here in terms of a failure of a bullish pattern, right? So you had a very sharp move up on Friday, and then sideways bull flag on Monday, and now we've, needless to say, failed that bull flag since you've broken down. So a little bit of a pattern failure there, and markets again are holding this little trend line right here, but we'll see again if that holds for the remainder of the day and how it plays out. Okay, couple stocks in motion today. SRPT is probably the biggest mover percentage-wise to the downside. 60% drop here. Take a look at this. This stock, basically the FDA came out and said they need more information on one of their drugs. They're questioning the drug and so forth. So the stock is just getting pummeled. Was a 1 billion plus market cap. Now it's under 500 million. The stock again does have some support levels here, though. I want to just give you them now. I see this level as being a little bit of a level which you're pretty close to. So I would say if we break down into the 1280-ish area, there'll be some support today. Ultimately, I would say this is your multi-day swing trade area right here. You have a level at the 9.5 point level, and then there's a gap window at around $7 and change here. All right, but again, these are your three levels going down. This first one's more of an intraday level, so just be aware this is more of an intraday level at the 1285, which is about $1 lower. And then if we get down into these lower ranges, it actually starts to look intriguing as a swing trade. Okay, so we'll continue to watch that as a potential swing trade and day trade as well. Going through a couple stocks, Amazon's taking a beating today. I think Amazon's ultimately put in a top, and you might say, well, how do you know that? Well, you got a pseudo doji up here, and the volume means a good amount of distribution was going on there. So that's number one. And then what I told you guys to watch for was ultimately a break one way or the other of the high and the low of that day from earnings right here. And you could see we broke it a few days ago, then we bounced up, which was all inside bars, and now we're breaking down again. So the 20 MA is a little bit of support. I think it ultimately gets through that and probably goes to gap fill. So I do think Amazon has some downside action here in the coming days, weeks, and even months based off of what I'm seeing in the charts. Okay, couple other stocks in motion. Rackspace today, Rackspace RAX, taking an absolute beating today. Beautiful drop there. And again, just in terms of a scalpable level, I really don't see much here. There was a little bit of a level here, which might be a multi-day level for a bounce. If we drop into this level over the next couple days, you might get a little bit of a bounce off of it. That level is the $38.80 level, so $38.80. Is the level there. You can see it's a gap fill right there, so that's why that level is important. Another level to watch on Rackspace is this secondary gap fill, okay? And this level is at the 36.15 level, and then obviously double bottom down here would be of significance, which is at the 34.30 level. So these are your three levels to the downside. I anticipate small bounces off each one. As it goes lower, you expect bigger bounces. So ultimately, the double bottom would be the biggest play probably if it went straight into that, but you'll get some bounces along the way at these other levels as well. All right, some word came through that the merger, the airline merger that had been postponed or possibly negated is back on the table, so airline stocks, good volume on those today. Although, believe it or not, a lot of these stocks are reversing from earlier gains. Take a look at LCC, which is U.S. Airways, all right? Look at this. I mean, this had this huge spike up here and is actually now negative on the day. Now, granted, the stock has had such an immense rally up, but, I mean, this has to be a signal. I mean, in terms of a potential top in the stock, I think that this could be it. Huge volume, almost 30 million thus far in the 1:30, 2 o'clock time frame here. And yeah, any way you cut it, when I see stuff like that, you might even get a topping tail there. Most likely downside will occur. And look at the run that this stock has been on. Same thing as DAL. DAL just an epic run. DAL almost even more extended here as it's gone from the $10 level, which is a year ago $10 to now $28 today. I mean, we're talking about a 200% gain there basically on that stock from $10. Okay. Let me just see what else is moving here on the charts. If there's anything else I want to update, there's a bunch of other big movers today, but nothing that I'm really focusing in on. Let's take a look at some of the large cap names. IBM today. Okay, IBM, interesting here. The stock popped up into the daily 50 MA and pulled right back. I think short-term IBM is most likely at a top. One of the stocks that I'm focusing in on is FedEx. Now, FedEx, there was Loeb, which is a hedge fund player, said he had bought a chunk or has FedEx, and it popped up right here dramatically. But look at how it's faded since then. And what I think is very interesting and why I think there's a top here in FedEx, and I don't agree with Loeb at all in terms of, I mean, obviously he didn't buy today. He probably has been long for a while. He might have used today to sell it for all we know. But one of the reasons why I think there's a top here in FedEx is because you had this two-bar surge to the downside into the 20, which you got a little bit of a bounce here. And then today's news about Loeb buying into it didn't even take out the high. It didn't even pierce the high. Okay? And we've backed off from that already and have come down pretty significantly from the highs on that announcement. So for me, at least, that's a very bearish indicator because, here technically, if the stock had that much more momentum to the upside, you should have broken the double top, the 52-week highs on this thing, on that sort of announcement. The fact that it's not seeing that type of action to the upside, to me, tells me top all over it. That this is now a downside play that should see some downside action in the coming weeks. Very significant downside. I actually have a downside target back to about the 120, 118 level on FedEx. Okay. Apple's today up 75 cents. That stock's actually hanging in relatively well. Baidu's down $1.25. Google's down $1. Chevron, Exxon both lower as well as Goldman. So we have a decent amount of red on the screen out there as the markets continue to be on the weak side. All right. And I'm just trying to go through and see what else is going on here, if there's anything else in the mix. But I think that's about it. Let's just go back to the spiders here. Interesting on the spiders, guys. Look at the spiders. So we're just hovering right on top of that secondary green line. That's worked really well right now, and we'll go from there. All right, have a great afternoon, great evening. Come join us. Take the 7-day free trial at inthemoneystocks.com. And again, let's profit for life. Take care.